Well, it has had and the immediate impact is that the differential between the old heavy fuel oil and the 0.5% low sulfur oil, that differential here in Singapore has been in excess of $300 per ton, which is very, very significant. And that, of course, gives an advantage to ships fitted with what we call scrubbers that captures these emissions over those ships that are burning the new low sulfur fuel. But so I do see this differential, in my opinion, is likely to narrow as time goes by, but certainly it is probably at this point a bit higher than we would have forecast.
So how onerous is that for the sector more broadly then?
Well, it is very onerous because these are huge amounts of money. And in some cases, in the container segment, for example, obviously the line will attempt to pass these costs on to the customer, and that is largely what has happened. But it does give, as I said before, the ships fitted with these exhaust gas systems an advantage.
All right, you mentioned before some of the spare overcapacity that we've seen. Presumably that has been as a result of the trade war that we've seen over the last 2 years. How big a hit did the sector take, and how long will it take, do you think, for it to be able to get back to pre-trade war levels, or has that not necessarily been an issue over the last 2 years or so? Has the sector continued to grow despite the fact that we've had trade tensions?
I mean, I think the trade war is probably a bit exaggerated in absolute terms, because in terms of U.S. China trade, you're talking about roughly 2% of the total. And so whilst it's true that these exports out of the West Coast have hurt the market, nonetheless, trade from Brazil, Australia and so on into China, and China being the key player in the dry bulk segment, has still been reasonably good. The reason for the lower rate is as much about capacity in excess, as I mentioned before, as it is about demand. But we expect with this new trade deal that demand overall will increase and will absorb this capacity. And I don't want to predict what the rates are going to be, but I would say that they are going to be better than they are at the moment, and at the moment they are pretty bad.
And how long do you think it will take for the demand story to really pick up, and for the signing of this deal and of course the implementation to then be reflected in the demand side of the equation, and then on the BDI as well? Well,
that is the absolute key question, because we would love to think that these cargoes will start moving within a week or two, but honestly only time will tell. But I think a safe bet would be the second half of the year.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now, to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.